Hello everyone, it's Henry here again. I appreciate every single one of you for tuning in. So if you can hear me and also see me very clearly, please just let me know so I can make sure that everyone can hear me and can also see my screen very clearly. So if you can hear, awesome, awesome, awesome. So let's get right to it. So today's session, we're just going to be talking about breaker structure and also change of character. What are the differences? What are the similarities? And the reason why this is very important is because we need to understand when the market structure has shifted from bullish or bearish, whether it's on the lower time frame or the higher time frame, because this is what gives us the understanding to know which direction of the market to trade, whether we should be looking for buys or whether we should be looking for sell opportunities. So I'm just going to paste that on the chart right here. And also, if any of you have any questions, you can simply drop it in the chat, or you can just go into the Telegram group and just drop the questions there. So the next time we have a session like this, we can all just review the questions before the sessions. So thank you very much, Creative Pro Editor. Thank you very much. I'm happy you all can hear me and can see me clearly. So let's get right to it. So now the first thing I need you to understand is the change of character is simply this. It's pretty much the same way. It's a break of structure, but the difference is that this is on the lower time frame. So for example, when you're looking for a break of structure on the lower time frame, it's called a change of character. I think it's just you understanding that these two are basically very similar to each other. The only difference is just the fact that this is the higher time frame and this is the lower time frame. So for example, you can basically see how price is going to the upside here, creating higher highs and higher lows, creating a higher high, higher low, and then this higher high, a higher low, and then rallied, created a higher high, a higher low, higher high, higher low, and a higher high. And then it dropped to the downside, dropped below this previous low, closed below it. The moment you see this candle closure, you can call this low a change of character, because this is simply a break of structure on the lower time frame. So because it's a break of structure on the lower time frame, you call it a change of character. And the reason for that is because as much as we've broken structure on the lower time frame, it doesn't mean that the trend on the long-term perspective on the bigger time frame has shifted. Because think about this, right? When the market is creating a swing high and a swing low, within that range swing high and the swing low, it's still going to be trending lower, trending higher. This is a typical example of what I mean. Now, if you look at this, this is the swing high, this is the swing low, and this is the swing high, and this is the daily time frame. But look at this now. When price is coming to the downside here, if you go to the lower time frame, go to like 1 hour, 30 minutes, 5 minutes, you will notice that we're going to be having a shift in market structure, a change of character within that high. So I'm trying to find the high. I'll just take it back and I'll just use bar replay. So this is a lot easy. So if you use the bar replay, take this to this position and then take it to 30 minutes. Now you notice that on the 30 minutes time frame, there's going to be a change of character on the lower time frame, and the trend is going to be bearish. And right here you can see on the 30 minutes how we created a low, then after that we created a high, created a low, created a high, low, high, low, this high, and then the market dropped to the downside. And this right here is the change of character right there, because it's on the lower time frame, which is 30 minutes. So this is what you use for your entries. If you're looking for lower time frame entries, 2 minutes, 3 minutes, 4 minutes, 10 minutes, 30 minutes, 1 hour, any shift in market structure there is simply a change of character. And you can use that for short-term trading. You can use it for intraday trading, day trading, scalping. But when you're looking for swing trading, the most important time frame for you to confirm that the structure has shifted whether it's from bullish to bearish, is using the higher time frame. Example, the daily time frame, the weekly time frame, the monthly time frame. These time frames are already showing you that on the long-term perspective, the trend has gone from what is bullish to bearish. It has shifted from whatever it was to what it is. Now, you can use the same concept both in trading and investing, but I need you to understand something, right? Before we see the daily break of structure, the market is going to break 2 minutes, 5 minutes, 10 minutes, 30 minutes, 1 hour, 4 hour before it gets to daily. So that is why it's very important for you to understand what to look out for on the lower time frame for the change of character and what to look out for the higher time frame for the shift in market structure. Make sense? So let's go and have a quick look on, let's use USD card for example. So you can basically see on USD card that the market on USD card, we were trending to the upside, consistently creating higher highs right here. And after that, created a higher low. Then after that, we created this higher high right here. So looking at this right here, you can basically see that on the weekly time frame, we're bullish, right? And you go to the monthly, on the monthly time frame, it looks like we're bullish as well, except the fact that we just came up, we took liquidity, we didn't close above here. So that's the only thing that is giving us kind of mixed signals that probably the market probably is not going to keep going to the upside. So we're potentially going to expect downside pressure. Now, if we take this to, I want to use the FXCM because they have the longest data. So FXCM is this one. Perfect. So now if we take this to the monthly time frame and then we'll take this to 12-month time frame, you can see that on the 12-month time frame, long term, look at this. The market structure was trending to the upside, creating higher highs, higher low, a higher high, and this is 12-month time frame, and then we drop to the downside, and this is a classic break of structure on the 12-month time frame, which is showing you that long-term perspective that USD card is bearish. In my opinion, long-term perspective, it is bearish. But this doesn't mean that if you go to 1 minute, 5 minutes, 1 month, that we're not going to see an opportunity for when the market is going to trend to the upside. Example, this move to the upside right here. You can see that when the market was going to the upside, what did we see? What could have made us believe that the market is going to go to the upside? And right now we should be looking for buys, despite the fact that long term we're expecting sells. What are we looking for? We're looking for a break of structure on the higher time frame. And right here you can see on the monthly time frame how the market was trending to the downside, creating lower highs and lower lows until it broke structure, significant structure on the monthly time frame, confirming a trend shift. So that simply means that price coming down here, all we're looking for is where could the market be coming down into? Is it coming to an imbalance or is it coming down for liquidity? An example here, you can see we have low resistance liquidity, which I'm going to cover in another session, not today, because I don't want to confuse you. And right here, price came down for that liquidity. After that run on liquidity, what else did we see? The market started trending to the upside. Now, once you have that good understanding of break of structure, the moment you're seeing this coming down, you're looking for opportunity to buy. And while you're buying, you're looking for areas of interest that price will come up to. How do you identify those areas? Simple, an imbalance, which is your draw on liquidity that will attract price to the upside. Now, take note, an imbalance is also a liquidity zone. Now, I'm not going to go too in depth on trying to explain this in this session because I don't want to confuse you all with too much information. So right here would be our target. So all we're doing is looking for buy opportunities down here. We're not going to buy and hold the trade and say we're going to hold it till it gets to that position. That's not what we're doing. What we're doing is looking for key levels, looking for liquidity zones, imbalances, discount zones, where the market is going to come into, give us a lower time frame break of structure, and we look for buys. And those lower time frame break of structure are the change of characters. Example, now look at this right here. We have this imbalance right here. We can have that outlined. The moment price is sinking in there, we're looking for a 1 hour break of structure, which is the change of character on the 1 hour time frame. Once we see that on the 1 hour time frame, we're looking for buy opportunities. And right here, we're currently on the 4 hour. So I don't really know if this is going to let us go to 1 hour, but awesome. We're on 1 hour time frame now. Now you can see that when price came into that position, look what happened right here. It came down in here, creating from this high, it was creating lower highs, lower lows, lower highs, lower lows, lower high, lower low, then created a lower high here, this lower low, and then eventually we broke structure right here. The moment you see this break of structure, that's when you start looking for buy opportunities. And look what happened. Price came back down, imbalance here, retested into it, and after that we had a strong rally. And even if you didn't know how to enter this, you could just enter the moment you see that break of structure. Just use that high as your entry. Your low will, your stop loss will be this low, add a few extra pips below, and that is your entry. And you can target 1:2, 1:3, or you can target another imbalance at the upper side, at the buy side. So you can look for an imbalance for as exit. Example, there's an imbalance here. You can use that as your take profit right here. You can even use that as your first take profit. Once price hit that, you close some positions. You can go to other higher time frames to look for other imbalances as well that could potentially attract price to the upside as your take profit too as well. We're going to cover exits in this boot camp. We're going to cover exits as well, so don't worry about that. So this as well would be your potential second take profit position, and you can also target maybe another third take profit position, or you can even close the entire position here. And this is a clean 1:3 risk to reward ratio. Very easy. And you can also get re-entries on this trade. You don't have to just have one entry. You could have second entry, third entry, fourth entry. I'll teach you all that in this program as well. And if you do have any questions at all, just let me know. So this is what break of structure looks like on the higher time frame. I already showed you on the monthly. So I'm just going to go down again and show you what a break of structure looks like on the daily. So with current price action right here, this is current price action right now. And I'm just going to make this a lighter color so it's not blocking the view. So now you can see we tapped a monthly imbalance. So what time frame break of structure would we like to see? We'd like to see a 4-hour break of structure. But before we do that, let's go to the 3-month time frame. And on 3-month time frame, we have 3-month imbalance, and price taps that 3-month imbalance. So that means for us to confirm a trend long-term shift, break of structure, we want to see a daily break of structure. And right here, you can see how nicely we were trending to the upside, created this high, and after that, we have this low, and we have this break of structure. So that simply means that all we're going to be looking for within the next few days, for the next few weeks, is if price can give us a beautiful retest inside an imbalance here, or this low, and then we see a 30 minutes break of structure, which is the change of character. Then we'll look for sell opportunities for the market to continue to the upside. So this is specifically what it looks like for change of character and the break of structure. So if you do have any questions at all about today's session, just feel free to let me know. You can message me in the group chat on Telegram, or you can just drop your comments below this live video today. And if you enjoyed this, I'll highly recommend you smash the like button. You can also subscribe to my channel so you can get all the notifications anytime I go live. I'll try to do this a lot more often. And if you want to get my course, you can click on one of the links in the description where you will see the link to my course, the last forex trading mentorship you ever need. And you can also click the link there to join my free Telegram group as well, where you'll get all the notifications anytime I'm going live. And I appreciate you all for tuning in again for session 2 today, and I'll see you all tomorrow for the